Hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching me. This Simply Stocks with another video. And after a gap of 3 months, I'm back with videos. So I was little occupied with a lot of things at home, and so could not put up videos. Hopefully, this time around, the videos would be regular. I'll try to do that. So the markets have gone a long way since April. So we'll discuss about all of those points and we'll discuss where we are headed next. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. And whatever discussions I have on stocks and markets is purely on the basis of the fact that I have been in this market as a retail investor over the last 14 years, and I'm discussing everything on my experience. So whatever buying or selling decisions that you take, kindly do consult your financial advisor and then take a call on any buying selling decisions on any stock. Whatever I discuss here is purely for educational purposes. Before I begin with the session, here's a small request. Can you support me on Patreon? Once you do that, help me grow the channel, help you also ask me questions, seek out answers in greater detail. You'll have access to my portfolio, analysis on different companies, discussions on domestic and global markets, updated watch list from time to time will be there, answer to a number of queries. Whatever queries you'll be having, I'll answer that. I have discontinued the YouTube membership because I have not been, you can say, honest with the YouTube members, that I have not been able to continuously post on YouTube, which I have been able to do on Patreon or other sites. So that's why I probably get on to Patreon or on WhatsApp on a yearly membership, and probably you'll get an updates there rather than going through the YouTube route. So I have discontinued that. So if you want to become a member or support me in any way possible, then get on to Patreon or on WhatsApp. So let's begin this session by discussing about the markets as a whole. So today we are seeing a deep correction in the market. If we see in the mid cap index, we are down somewhere around 1% and the market is headed lower. This was probably the writing was on the wall for the last few days, and this is exactly why I'm making this video, that many retail investors, and I see on Twitter and everywhere else, that this is something different and the markets may just continue to go up. There will be a little correction and markets will try to go up. So let's understand as to where the markets are in terms of valuations and where we are headed. The kind of fall we are seeing at the moment, it doesn't seem like that we are headed higher, and I'll describe why. So let's just look at first the Nifty. So what we have seen in the Nifty is that we have gone from levels of say 24,000, from 21,000 200 or so, 21. So this was the level on the 4th of June, 21,280, all the way to 24,700. So if we round it off, then we have 24,700 on one end, 21,300 on the other end, and this is a massive move of 16% in about 6 weeks. In 6 weeks, the market, the Nifty, the large cap index, has moved up 16%, and we are seeing that it is continuing today. And if you look at the RSI went up to as high as 75 and a half levels. So RSI is in the overbought zone. We have a situation where the Nifty is up 16% in a month. And if you look at the differential between the 50 DMA and the Nifty, the 50 DMA is around 23,550, the Nifty is around 24,670, 680, let's say 24,700. Even on that terms, we are in a situation of a stretched market. I won't say that we are in any case in a bubble or anything that people are talking about, but the market is stretched. 5% differential from the 50 DMA, it is extremely stretched. If you look at 3rd June the numbers, where we made a high of 23,340, the 50 DMA was around 22,400 or so. I think it was around 22,440. So around 900 points differential was there from the 50 DMA. And we had a situation where the Nifty was around 4%. So again 4%. Now this was a differential of 4.2% from where we topped out. Here the differential has increased to around 5%. Things are looking stretched. Yes, if you look at a 1 year chart of Nifty, we had a situation in somewhere around, you can say, January, during the Ram Mandir days, 16th of January. We made a high of around 22,120, where your 50 DMA was around 21,000. So here the differential was slightly higher. Here the differential between the 50 DMA and the high was around 5.7%. So hopefully you are following me. What I have done is that differential from the 50 DMA to the top, right now it is around 5%. If we look further, if I look at the 1 year chart closely, then around 8th of July, 9th of July, 6th, 7th, 8th of July, the differential between the 50 DMA and the high at that point of time, 5th, 6th of July, was around 5%, 5.1%. So things are stretched, and in that case I believe a decent correction, I won't say a huge downfall is possible, but the market could go down by around 5 to 6%. So what we are looking at the moment is that the market could retrace back to this 50 DMA or just below that. Currently the 50 DMA is around 23,500, 23,550. I believe that we could go to levels of 23,300, 23,350. That's what I feel, and I'll give you the reason for that. So let's come to the PE part of things, and then you'll probably understand. So if we look at the Nifty PE for the moment, and I'll do that through Screener, which is a better way of looking at valuation of Nifty. Now at the moment Nifty is trading at 23.4 times. Normally, so this is 23.4 times at current earnings. Normally market trades around 20-21 times at most in an expensive market. So this is the PE ratio thing. Now look at it extremely closely. 23.6 times in January when we topped up what I was talking about. We topped around 23.6 times. 23.1 times we topped around March, and we dropped a bit. In April, around 10th of April, when the election started, we topped, the market topped around 23.3 times, and now we are getting stretched towards 23.4, 23.5 times. Now what is interesting is that if you look at in July, we topped, the market topped at around 24 times, and normally in June, July, what happens is that the market tries to price in next year's earnings completely, so FY25 earnings completely. So let's get to the earnings part, and then we'll have a better understanding. So in FY24 we did 1050 rupees, and that's why we are trading at, you can say, that's why the valuation comes out to be 23.4 times. But in FY25 we are going to do around 1200 rupees, let's say 1195 or so. Based on 1195 rupees at around 24,700, we are looking at a situation where the market is around 20.7 times. Now what is interesting is that on a forward earnings basis, normally market tops out around, for a little correction, around 20.5 to 21 times, 20.8 times or something like that. Now why I'm stressing this fact is that overall what I'm looking at is that in the next couple of years we are going to do 17-18%, 14-15% earnings growth. So on 1052 rupees, if I take 14% earnings growth, we are looking at 1200 rupees. I'm sorry. So on 1200 rupees, if I take 23.4 times, which is the current stretched valuation, we are looking at a scenario where then in the next 1 year we are looking at 28,000 on the Nifty. So somebody looking to hold from a 1 to 2 years point of view, there's no issue. There could be a correction of 5 to 8% and we will be headed towards 28,000. The problem lies in the fact that over the last 1 month, 1.5 months, the market has gone up somewhere around 15-16%. So there has to be a course correction, a retracement towards at least the 20 DMA, and in my opinion this should go to the 50 DMA. So how much the market can correct? I believe the market normally trades around 19 and a half times you can say long term PE of the market, which has shifted from 17-18 times, which was in say 2017, 16, 15, 18 to around 19 to 20 times after the pandemic, because most of the retailers have come in after the pandemic and we have seen a great jump in with respect to the market participation since 2020. So I believe the market should retrace back to 19 and a half, 19.3 times or something like that. What is the current PE? As I explained, 23.3 times, but this is forward. So 23.4 times, 1052. This is forward times, forward. Now, sorry, this is the current PE. Now forward earnings, in terms of forward earnings of 1200 rupees, if we take 19.4 times, which I am talking about, we are looking at 23,280. And this is where the market might head towards. So market is always forward looking. So let me make it extremely clear for you. In FY25 we expect 1200 rupees of earnings. Based on FY25 earnings, currently the market is trading at, so at 1200 rupees, currently the market is trading at around 20.6 times. I believe this 20.6 times could correct to 19.5, 19.4 times into the FY25 earnings, which is 1200 rupees. 23,300 is what I'm looking at. The market could stretch itself to 24,800, and if I take 23,300 as a base level, at least a correction, there could be a correction of 1500 points, which is around 6%. So a 6% nifty correction is what I believe is possible. Now how long will it take is the most important question. I believe that from here on in, from Friday onwards, from tomorrow onwards, and this is exactly why I'm making the videos, that so that I want to convey this thing, that I believe that from tomorrow onwards, over the next 1 week or so, we could see this 5-6% correction. I don't think in today's world of AI and automated trading we'll have a 2-3 months correction, or the way we used to have corrections before 2018. So I feel that there could be a 1200-1300 point correction on the index at least. We could head towards 23,500, 550, and then even lower than that. We could breach that and go lower, and that will be a huge buying opportunity. Similarly, on the mid cap index, if we look at the CNX mid cap index, which has started to fall even before the Nifty, I think it's going to go even lower. So I believe here the fall could be even more excruciating, and I feel that this should head. So if I see say 6% correction in the larger indices, Nifty 50, I would say we will see a 7.5 to 8% correction in the mid cap index from the high. So if the high was around 58,000, 57,909 was the high. So if we are saying 58,000 as the high, I believe an 8% correction on that is around 4,500. So I think we are headed towards 53,500. It should be like that. Yes, 53,500. Now currently the 50 DMA is again 54,300, 400. We'll breach that, and in my opinion we are headed towards all the way to 53,500 over the next week or so, 10 days or so, by the end of the month, by 25th, 26th of July. So this correction has begun. People need to be wary of this. Short term players should get out with stop losses, because the correction could be brutal, could be short but brutal, and August could be good if that happens. So the market needs to get light, market needs to correct a bit for another up move. Eventually I believe that something like mid cap index should be around 60,000 to 62,000 by the end of the year, 62,000 by January, and the Nifty could be around 28,000. I believe Nifty at 28,000 with 1200 rupees of earnings would be a prudent thing at that point of time, but that could happen by February, March at least. I mean, not before that. So these corrections will come in. There's no way possible for the market to go straight away on the upside. So this is exactly what I wanted to convey to all of you. Kindly do subscribe to my channel, hit the bell icon so you can get my video straight away when I post it, and also support me through Patreon and YouTube, sorry, Patreon and WhatsApp if you want. And if you want that membership, you can probably email me as well for that. So I'm sorry for that, I'm having a little issue with the nose. So that's my call. If you want to talk to me directly or through messages, you can be a member there as well. So in terms of Nifty, I'm looking at 23,300, 23,400. In terms of the mid cap index, I'm looking at somewhere around 53,500 on the mid cap index. Thank you.